Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, June 19th, 2009. Well, we're seeing the markets actually reversing from earlier gains today, at least mostly across the board. Now, the key here is what is causing the reversal, because needless to say, we know we had a light volume day planned for today. Fridays are always light volume, especially into the summer now. We're seeing that more and more so. But the real key today was that you had options expiration this morning. That kept the markets positive until now, and you are seeing them fall all the way back down. The S&P is basically flat on the day. The Dow down 26.5 points, and the NASDAQ still up about 15 points. Now, the NASDAQ is very, very strong today. Technology is very strong after Research in Motion actually announced earnings yesterday. However, even though the earnings were not as good as Research in Motion had really hoped for or had hoped in their stock price, as we see the stock price trading lower on the day, we actually are seeing overall the rest of the technology sector really gather some steam. Apple up $1.80 still, Baidu up almost $3, Google up $3, and Amazon up $1.10. So those key technology plays are very, very strong today, even though Research in Motion is a little on the weak side. And I can briefly show you Research in Motion's chart here. All right, and there you go. You can see it's just basically continued to trade down. Now, the key on Research in Motion, and I talked about this in the chat room today, is that ultimately the lows after hours yesterday were in the 71 range. So I said earlier today when it was trading at around 75 or so, that if we saw a decline on the market, this Research in Motion could very much so come back to that 71 level. It's already partially there, so I've been dead on that call as it's continued to decline, now trading in the high 72s. But a 71 handle would not be shocking if we continue to sell off later today. Now, going back to the spiders, guys, this is really the bottom line about the spiders. You basically saw a gap up today. In the chat room, what I talked about is how you don't necessarily trust gap ups on the overall, indexes on an options expiration Friday, because oftentimes they're trying to get the last little bit of, pricing or people to get rid of the options and just kind of exchange it. They're playing a few games, in other words. And I think that's what you did see this morning. The market, interestingly enough, though, held perfectly to our key levels. Now, the key levels are as follows. I've had these levels on for days now, guys. Those of you that follow these videos know how accurate they are, and they continue to be just that. Take a look at our levels from yesterday. We isolated this 92.50 to 60 level here in constant color. The dotted ones are minor levels, but in any case, you can see how this level yesterday, these levels have been on our charts, for those of you that are new to these videos, for literally weeks and weeks and weeks, and they keep on coming back into play. And sure enough, yesterday it was beautiful. The top was put in right out above this level, right around 92.50 to 92.65, right up here. Guess what? Today the gap up right to that same level. We push up right to test that again, pull back, test up again, right under the 200 moving average, and then the sell-off and rollover comes down. Now, the other level I was watching, and I had this on the trend line, on the chat room, trend lines for the chat room to watch, was this lower trend line. Take a look at this. This is basically a channel we've been in. So you take the upper range as your upper portion of basically a trend line of how we've been kind of staying in a small range, and then you can actually take this lower point and connect it to this low, and across, and you can see how you have it sliding up trend line and then a upper area. So you basically have a sort of triangle in shape here. And that's exactly what happened today. And what happened was just into lunchtime, we closed below, retraced back up, and then the next candle closed back below. That's telling you this is a broken area. All right, notice how you got below, recaptured it, but then the next candle came right back below, telling you there's most likely going to be downside. And sure enough, we did see downside coming right back in, a hard sell-off on the spiders, taking us down to a little bit of minor support right here with a good mega support line at 91.75. This 91.75 to 91.80 level, which is really right where we are right here, guys, is a major, major level. I wouldn't be shocked to see us test that level at some point today. Now, having said that, we have to understand a couple other things going on. Number one is you have to look at the volume today. Volume since the opening bell has been extremely light. So volume today will be a very light day, probably getting lighter in the afternoon session. We have to understand that when there's light volume on a Friday afternoon, it's very easy for a buy program to come in the markets and push them back up a little bit. So it wouldn't shock me to see, especially now that we've come down right on top of this 91.75, 91.80 level right down here, to see some bidding come in. Now, again, I think we might test this lower level here, but ultimately maybe bounce up into the close would not be a shock to me at all. Now, if we continue to sell off, that's fantastic. I'd love to see it. I'd love to see the market break this 91.75, close below it on a closing basis would be pretty nice. If we do start to really tank this afternoon, you could be looking for a sell-off to about 91.25 down here, which is another major level on the charts at 91.25. So keep a close eye on this market, folks. It's actually turning out to be a very, very interesting day. Even though the volume is extremely light. Again, the big things for today, folks, you're seeing financials slightly weaker across the board. Still okay, but definitely a little bit on the weaker side today on a few of them, like Goldman Sachs. You can see Goldman is down on the day, down 70 cents. Morgan Stanley is just flat on the day. Wells Fargo trading flat on the day as well. So a lot of things really showing us that the financials are weak to neutral today, while the key things that are floating the markets up seem to be the technology stocks. Now, there is another sector that's getting hit today that's taking this market down, and for those of you that are appraised of the situation, you might want to look at oil. Oil has had a monster reversal today. Look at this drop on the USO. What a dump on the USO here, folks. Unbelievable sell-off here as oil really took a dump here all the way back down to the 38 level. 38, very good support. You can see right here. Look at this trend line, right, with the lows going back a few days, and there it is. But look at that dump off on the USO. It's actually a little surprising that we didn't see more selling on the overall markets, to be honest, which also tells me that if oil gets a bounce here, and let's say we get a retrace on oil back up here, or a 50% retrace, or 0.382 retrace as Fibonacci levels, you could actually see the markets go back positive very nicely only because of that one factor. So please be aware of that, folks. This is a major, major thing, and this is all options expiration kind of activity going on. Got to understand that these whips, kind of the market being a little screwy right now, is very much so that options expiration activity going on. All right, so watch oil going into the end of the day. Also take a look at the UUP. The UUP is slightly weaker, but it is off the lows. Dollar is slightly weaker, as you can see. Rolled over midday-ish and then came back early afternoon here over the last hour or so, nicely off the lows. So that's another thing to watch very, very closely. All right, last but not least, I want to take a look at gold. Gold having a nice little update, which coincides with the fact that the dollar is slightly lower. Oil is the only screwy thing with that whole dollar issue today, which we, again, will cover in the nightly videos for our premium subscribers, and very, very much in depth, isolating the key targets on the market for next week, and really giving everything projections out on various stocks like Goldman, oil, gold, the markets, the spiders, you name it. We'll be talking about the dollar as well, how to play that, and how to play it into next week. In addition, folks, this weekend they'll be debuting our new service as part of the Research Center. So in the Research Center subscribers, we'll be getting a new service included, which will be called Hot Charts and Alerts. Unbelievable service. They're going to be coming into play now, where we're going to be posting some stuff on some various stocks based on longer-term investors and swing traders, more for them and gearing it towards them. On charts, we're going to be diagnosing charts and basically analyzing a bunch of charts on that, kind of like a blog for the chief market strategist. So you'll have the top people posting on there when they see a nice chart. It's going to be, so it's kind of like a step up. It's like a premium service blog, which when something comes up will be posted up there. So we do encourage you to come join that Research Center and get on board there, as that will be debuting on Sunday or so, Saturday, Sunday, and we'll start to post some charts if we find some good activities or alerts up there for our premium subscribers only. All right, last but not least, as always, we always talk about the chat room as being a fantastic learning environment. We encourage you to come join us when you can. Last but not least, also, folks, one more thing. The webinar in a couple weeks, the weekend after July 4th, we have a new webinar series for those of you that want to take that webinar. Definitely worthwhile, as it will be covering some cycle work, some stuff that you're not going to be able to find in any books. It's our proprietary stuff, so you want to probably take advantage of that if you want to leg up on making money. Have a wonderful rest of the day, folks. Continue to watch the spiders. As we can see right now, spiders are getting a little bit of a bounce, but this could be a bearish flag pattern forming. You'll watch for a little bit of near-term resistance at 92-ish, 92.05. If you get through that, you're going to have these moving averages sloping lower. That'll be resistance. On the downside, support will remain 91.75, 91.80, really right where we came down to now. And if that breaks, you're looking for 91.25 or so on the downside. Take care, folks.